UPBOptionMillionaires.com on this Thursday, January 14, 2016, and everybody's asking, hello, is it over? They want to know if the stock market pullback that we saw since the start of the year in 2016 is over. We're starting to see a little bit of a bounce here this morning. JP Morgan Chase announced earnings, and that's helping to bolster S&P 500 futures. But if you draw a trend line across, we go back to the Ebola lows that we saw in 2014 and the lows that we saw in 2015, which I thought heading into the year that we were going to hit. Did not think it would come this fast, this furious. But indeed it has. So if you pull the trend line across, we are right at support. I put this up at StockTwits and Twitter. A key line to watch here is the support trend line going back a couple years. We break through it. That brings us to the lows that we saw at the start of 2014. If we do hold that, we're going to see a nice little bounce here, much in the same fashion that we saw in the August to September months of 2015. Helping also to boost S&P 500 futures a little bit here is crude oil. Hello, crude. Hello, crude oil. They play that song way too much. But if you look crude oil from a long-term perspective here at 110, everybody thought it was going to 120. Hey, watch out for crude oil going to $140 a barrel, 0.05 cents and change or somewhere around there. And if you look, crude oil has done the exact opposite since the summer of 2014. A pretty surprisingly nasty decline. You could almost call it a crash. We're down under 30 yesterday. Briefly, we're bouncing here up over 1%. Crude oil is something to watch going forward. If you go back to last year, we had a bounce in January, pulled back to our lows in March. And then in the summer, just before the August swoon in June and July, we had a nice little consolidation period. That would be something the market needs. We don't need this continued sell-off. If the stock market wants to rally a little bit here, we need crude oil to find its base. Find it. Find its base. There's another song all about that base. Let's go on to a couple other charts here. The volatility index rising. You see we spike up in the August period of 2015 with the stock market crash, quote unquote. We're starting to get up there. And if you look back to Ebola, when everybody was going to die, and of course, just a week ago, I think they came out and said Ebola is they fixed it. It's fixed. Don't have to worry about that anymore. So I don't know why the VIX is so high today. No. We do know why, because stock markets around the globe are falling. China was down some 727 points and 0.35%. I don't even know, but it was down big. If you look, volatility index, historically, we see these spikes. Hello, spike. These spikes get sold off. So at some point, we're going to sell off. I mean, it's just inevitable. Unless everything goes to zero and we're all, trying to warm ourselves around a big fire pit, the VIX is going to pull back. It's going to pull back at some point. All of this fear in the market, everybody's coming out now and saying, oh, this is it. This is the bottom for the market. No, they're not. Actually, I don't hear that. I hear more people calling for more weakness. This is what we've been waiting for 8 years. We've been shorting this market. Same with FCX. Look, I've talked about this one for quite a while. Breaking down, I said once it broke through the neckline, we were going to see it break under the $20 target. It has, and now to penny stock status. I said FCX was going to be the CLF of 2015 and 16. And you look CLF, the same kind of chart. We had these parabolic rises, but ultimately sells off. We're seeing that with GoPro. And to think in 2015, GoPro was over $65 a share, pull back now, down to $10. We're seeing the analysts come out here, cut their targets, 20, 15, 10. Not looking good for GoPro. Also another stock that's fallen. Hello, I've fallen and I can't tweet up. Twitter, down to new record lows here to the 1868 level. Not looking good. It seems the stock continues to find little bid support and the sellers are just out in force. So that's something to watch with Twitter. I think ultimately Twitter's going to head back to the 30s. It's pretty a robust opinion there on my part, but I do think that is what is going to happen. If you look, Intel reports earnings, I believe, after the bell today. If you look at Intel, you could draw a trend line across for support, but does not look good. And if you look back in April of last year, in 2015, I looked for a swoon down to the 26, 25 level on a head and shoulders completion pattern. It did indeed happen. We've had a nice rally. So we can look at Intel here from a support perspective. If we break through, you could draw a trend line right here. If we break through that, I think we're going to head back into the 20s for Intel. Reporting earnings after the bell today. Earnings really going to start kicking off next week. Speaking of earnings, Amazon reported earnings last year, had a beautiful gap up. And look at this candle yesterday. Trying to fill that gap. We're almost there, I believe, the 575 level. came down to 581. One of the biggest red candles for Amazon that it's had in its history. Almost 6% to the downside, $36. So if you look for Amazon support, it will be at this gap in this low 570 range before we get a bounce. Now let's look at Apple, this bearish pattern I talked about in the middle of last year, this wonderful head and shoulders topping pattern, really coming to fruition. You can see this break below the 110 level, and then 105 came up to kiss it before continuing to decline, now putting in some sort of a bear flag here. And I thought Apple would head into 80s this year, and that's what seems to be the case here as we start to really break down for Apple. But the last time it broke down to September 12 highs, it fell for almost, 7-8 months into the May 2013 lows, put in a nice W bottom. Before moving back up, we could see something similar here for Apple. So it's something to really kind of step back and look at for Apple, because I'm not sure we're going to see this parabolic rise. It's more of a digestion of what's gone on the last couple of years with Apple. Share buybacks have helped fuel a lot of this rally. Speaking of share buybacks, I talked about this in my 2016 predictions. Home Depot's been buying back their own stock for quite a while now. Not looking so good here. We've retraced a lot of the record highs that we saw heading into the year. Home Depot pulled back almost 5% yesterday. It's a move I've been waiting for quite a while. And I think it's the start of a move back down to the 110 level here. That's where we're going to find support. So a lot of bearish charts out there. Also Disney. You can see Disney just could not hold on to that 100 level. Looks very bearish. Double top here. The next support line, bring it across at about 90 for Disney. Again, things not looking good out there. You can look at Google. Google's breaking down. And if you bring up just a 1-year chart, you can see another earnings gap that has to get filled. Where is that gap at? 700. We got another 20 bucks of downside for Google. You look at Facebook. Facebook, I brought this chart up. Look at this wonderful support line. Here we are. Hello! We break through this. Facebook is headed down to the 72.50 level, $20 more of downside. Down 4 bucks. So the support so far has been strong. Look at that, hanging on by a thread. Out on the ledge. Waiting to jump, but just not getting confirmation yet for Facebook. And finally, let's look at the bond market. Hello, bond market. Look at it's been shaping up for quite a while. Compressing, I like to say. And what does this tell you here? We're getting bonds breaking out here. The 20-year Treasury ETF breaking out. What does that tell you? Federal Reserve is raising interest rates. It really defies logic. Spock, what do you make of this TLT action? Well, Mr. James T. Kirk, I'm not good at that kind of stuff. But anyway, you can see TLT certainly breaking out here. This, opens up the early 2016 rally for the bond market, something I did not see happening. I saw it happening in 2015. So you look at 130 level as the next real line in the sand here before we pull back. Junk bonds. On the flip side, we've got junk bonds, something I think is going to break down here for the JNK down to the lows that we saw back in 2011. You can see the breakdown occurring here. We're not even oversold yet. A lot of room to go to the downside. You can also look at high yield here continuing to fall, and this rollover will again continue. You can see a 62.50 level here for 2011 is a likely scenario. Some of the big bloated names like AutoZone. Wow, look how high we flew into the highs that we saw in 2015. A lot of downside here, potential. Down to the 675 level, you can draw a trend line across. You can already see with AutoNation pulling back. Look at that decline. Pretty nasty stuff here. Papa John's, another one that I think is going to continue to fall. And I think one of the last bastions here for the stock market is consumer staples holding up pretty well after hitting record highs late in 2015. Support is strong here at the 48.75 level. You see we came back down to it yesterday. This is something to watch. Consumer staples. Oh, yeah. So exciting. All right, UPBOptionMillionaires.com. And one last chart. I brought this up. StockTwits and Twitter. Monsanto breaking down. This is a beautiful bear flag formation starting to break out of it. Target 85, then down to 80. I'll see you in the chat room at OptionMillionaires.com. Stop by. The best markets to trade are bear markets. We love them. So half of me wants to, see a little bit of a bounce here to get some higher prices to trade to the downside for. The other half of me wants the carnage to just continue. UPBOptionMillionaires.com. See you in the chat room.